thanks everyone for braving the weather and to come up and be here today. So we're going to start by just letting each panelist give a little bit about your background and how you got where you are. And here's maybe what's different for you, since we've just heard a lot from Brian and we're hoping to hear a lot more. Tell us a little bit about what your average day looks like, right? You get into work, what do you do? And try to give us a sense for all of the different kinds of things that you can actually do in the bank. So I guess we'll start with you, Brian.
Okay, so is this on?
It is.
Okay, great. So I'm not going to go a lot in my background. I think you just heard that for 45 minutes. I don't want to bore you anymore. So I'll go right into a typical day. I'm a portfolio manager, work with some of the wealthiest families actually throughout the U.S. and the world on portfolio management, portfolio construction. So a typical day, my daughters always are wondering why I'm listening to the news. Because I try to tell them, world events, different events affect markets, what's going on, what's said, what country's doing what. So in the morning, we have a research call every morning where we talk about, if needed, different events, different markets, different views of the world. The last 2 weeks, last 3 weeks, obviously we finally seen some volatility in the market, which we haven't seen for the last 2 years. So I'm spending time on that. The volume of calls go up in the last couple of weeks. I'll have clients call up asking about their portfolio, their investment. Should they be selling? Should they be buying? A typical day, I had a conference call. It's not just on the money management side, but when you deal with this kind of wealth, it's more than that. I work a lot. I had a call yesterday with my client and a trust and estate attorney. The way the system's set up right now, if you have over $20 million, now 20, used to be 10 if you're married, now it's 20, that basically anything over 21 million, you're going to give half it away to taxes. So we spend a lot of time. So if you have $100 million, and you pass away, you'd owe $40 million approximately of estate tax. So we spend a lot of time constructing different portfolios, working with them, different trusts, different things on that side. Another client called up who has a lot of our clients have one thing in common. A large piece of stock will make up a lot of their net worth at a very low cost basis. So you can sell it, but then you pay a big tax bill. So we'll spend a lot of time, instead of doing that, we can hedge it. We'll use option strategies that coincide with their existing portfolio. So I'm spending all day long looking at different asset classes, different scenarios with high net worth individuals and helping them manage their portfolio.
My name is Lucas. I'm with SoFi. My day is comprised of managing a pipeline. So I work in an operations center. I manage a sales team. Our team at any given time is probably working on about 150 to 200 loans per person. They can be at any different stage. My time is comprised of looking at the loans, and these are mortgage loans, whether it be a refinance, cash out refinance, or purchase transaction, and making sure that everything's going smoothly and that we're on track to hit all of our timelines. And my eyes are on every single loan every single day. We work in a very competitive, very high-touch industry, so we can't afford for anything to go awry or we damage our reputation and the customer experience. So I'm stepping in where I need to push the pace, make exceptions, talk to the capital markets team about pricing, underwriting about getting something through, reviewing a piece of documentation, etc. That's the bulk of my day. That's it.
All right, my name's Mark Nordstrom, work for Zions Bank. I'm a commercial relationship manager there, here locally. I work on the branch there on 5th North. I've been with the bank for almost 16 years, or a little over 16 years now, and mostly doing the same thing. And in a retail bank, you can do a lot of different things. You can manage consumer loans, mortgages, things like that. In my world, we lend money to businesses, and in my world, particularly more commercial lending, where we're lending $1 million plus to different businesses, different than small business lending. My job really is a sales job. So I am trying to find people that we want to lend money to, that we, where we can get our money back and make a return on it. So I'm out visiting with customers on a daily basis, trying to get to know them and build relationships with them so that we can lend them money. It's very competitive. There's a lot of banks with a lot of money that need to get it employed, and so it really is, the differentiating thing for me is trying to set myself apart with the level of customer service that I have and the value that I can add to my customers and helping them be successful in their business as they grow.
My name's Rick. Many of you are my students. I'm on the full-time faculty now, but formerly I was with the Federal Reserve for about 27 years. And after I retired from there and thought that fly fishing would be my life, I was recruited to assist a new regulator in the Fannie and Freddie world of the mortgage-backed entities. They're called government-sponsored enterprises that failed during the crisis that was alluded to earlier. But a typical day in my career in finance, especially at the Federal Reserve, was thinking about bank regulation, what banks were doing, where there were concentrations of credit, what trends were emerging, what safety and soundness issues might be present. Also, at the same time, you would be reviewing monetary policy and monetary policy inputs, making sure that that our economists and researchers would have dialed in what they think the monetary position or policy making function of the Fed should be. And then, of course, a lot of people don't know it, but keeping the wholesale payment system running from wires, wire transfer, ACH, all the things that really are in the background. And those are the three things that kept me busy every day. And all of them were very interesting. And it was easy to make a mistake, and so you had to work very hard to stay on top of it.
My name is Joseph Morgan. I started my career at Citigroup in sales and trading. I spent a year in equities and a year in foreign exchange. And I recently made a big career change and moved to Salt Lake and have been working for a commercial bank specializing in equipment finance. So I'm an asset manager, so most of my day is actually spent trying to determine the assets that we have, the collateral that we have on any loan or lease, what it's valued at, and what we could sell it for if the loan went bad. So there's a large portfolio at the bank of loans and leases that have titled equipment, just trucks, even non-titled equipment like cranes, construction equipment, ag equipment. And my job is to determine what the value of that equipment is and how and when and where to sell it. So usually we work with our legal department and our portfolio management team, not an entirely different portfolio management team than one at Goldman doing wealth management with stocks and bonds and the sort. But I have an exciting job where one day I'll have a $500,000 crane come up and say, hey, this borrower went default, where and how much can we sell this for? Or, hey, we have a bunch of trucks, the loan went bad, what should we do? So I work a lot with the legal department and with the credit teams trying to evaluate the loans that are going bad, what should we do with them, how can we use the collateral to kind of get in a more advantageous position if the company's going to go bankrupt. So.
Great, thanks for that. A really varied set of activities and careers in a bank. And maybe we can build on that and speak to the students. And let me ask you this, and I'll probably start with you, Joe. Describe an ideal resume, right? You're looking to hire for your team, right? And the resumes are coming across your desk. And what sort of skills are you looking for, right? And what kind of advice would you give our students in terms of classes they'd be taking, but also the activities they'd be engaging in while they're here at USU?
Sure. I mean, depending on the role you're applying for in banking, your resume can look so different. I mean, there are sales roles, there are roles like mine which don't, just maybe some of you feel like banking. I'd say the number one thing on your resume is you have to pay attention to detail, make sure there aren't any mistakes on there. When an employer is going through and looking at resumes, you have to have something that stands out. So, I mean, my resumes, I remember people telling me they really liked it because there was a bit of blue in my resume. I had my name in a professional dark blue on the top. But whatever you can have on there to make it stick out and to make sure that it's totally accurate. An activity, I mean, all the extracurriculars are good. If you're here and you're part of the finance club or the accounting club or something outside of class that has really proven that you're interested in the markets, something of that sort will help you stand out rather than just, a similar major or a similar GPA that the others have taken and are enrolled in.
I would say the same thing, and especially coming right out of college. I think it was discussed earlier today, a demonstration of work ethic. It's important to have internships and things like that, but the ability to the ability to demonstrate that you've worked, you know what work is like, and that you enjoy work. You have a passion for hard work. If you can convey that on a resume, that's important. And then in terms of the coursework, if you navigated a program of study that emphasized, especially in finance, quantitative skills, knowledge of accounting, writing skills. I spent more time at the Federal Reserve writing policy statements and letters to CEOs of banks and examination reports. And I really had to step up my writing skills after I had left school to pass muster. If you put a letter or a memo in front of a president of a Federal Reserve Bank, you better have made it concise, convincing, and well-balanced. So I wouldn't underemphasize that.
I look for, I'm relatively new as a manager, so I haven't really had a lot of opportunity to look through a lot of resumes, and our particular bank screens a lot of those before I even see them. So, you could have 50 people apply for a job, and I would see 5 or 6 of those resumes, and so they're doing a lot of that work for us, where I'm not looking at a lot of those. When they come to me, I look at them and see if they're written in a way that they communicate effectively on what their skills and abilities really are. So I think that's important, because everything that we do, when we're communicating with customers or with each other, that's super important. And I want to see that it's clear, that it's concise, that it makes sense, that I can understand it. I might not know anything about their particular job or whatever, but I can understand what their role and what they learned in that particular role would have been. I like to see that they do things outside, learn things outside of school. Like if there's an opportunity for them to learn, take something in Excel where it wasn't a school activity, but they certified in it or something like that, that's something that stands out. Because I want somebody that's going to be a learner, because you're at a certain level when you graduate, and then once you enter the workforce, then your employer will want to teach you their way, their culture, how they do it. So I feel like that's really important, that people have the ability to learn, and they're self-starters to learn as well.
I would say that your resume, at least for me, gets you in the door. It definitely doesn't get you the job. I'm hiring for sales positions, so just like you said, I think that it gets you through the screeners and to me. I will probably look at your resume for less than a minute, but all I care about is who you are and your personality. You could have a 3.5 GPA and get the job over someone else that's a 4.0. I'm not saying not to study, but I think to me, your real resume is from the time we start interacting to the time we make an offer, that is your resume. Are you professional? Do you have a firm handshake? Are you dressed well? Those are all things that people will tell you, but really in a sales position, you need to be eloquent, persistent, show that you have the hustle to get it done. Those are things that I care about. Those are the intangibles that you can't show on your resume, but you need to show me to be able to get an offer. So I would say that your resume is important. And one thing I would say that I think all of us kind of share is I'm not looking at your GPA or anything like that as much as I am what you've done outside. because that's what I'm going to start talking about. Like when I interview, it's not like, the only interview question I actually ask is like 3 words to describe yourself, because I want to see what you think about, like how you would describe yourself, and then I'm going to call somebody else and ask them what 3 words they would use and see if they match up. And if 2 of the 3 match up, I know that you aren't lying, and I know that if there are like 15 words I'm looking for, and if any of the 2 out of 3 are in the 15, every person that I've hired in the last year has met that, and everyone has done very well. So that's my philosophy.
When you put together a resume, and listen, it's a competitive job market, right? Unemployment at historically low levels here at 4%, meaning there's a lot of competition. You want to set, I said earlier, you want to set yourself apart. So a lot of times when you look at resumes, you're looking for reasons not to hire the person because you've got such a huge stack of them. And so you need to do everything you can to set yourself apart. So at Goldman, for example, it's kind of 3.5's the barometer, meaning if it's below 3.5, it's a reason, it's an easy reason, wrong or right. It's an easy reason, okay, that's not going to work, that's not going to work. And then you look down the next one. So obviously good grades, part of it, I think, it would have to be a 3.5 or higher. And then other than that, what have you done to set yourself apart? Do you have relevant work experience? Did you work 20 hours a week or part-time while you were going to school? Interestingly enough, there's a good work ethic at Utah State where I think it's very typical for students to work their way through school. Outside of Utah State, if you go to like an Ivy League school, no one there works outside of, they have awesome summer jobs, but during the school year, no one works during the school. And that sticks out. You say, wow, this person got a 3.6 working 20 hours a week. And it's even better if it's irrelevant to your work experience, what you're applying to, or if you can tie it to what you're applying to. Extracurricular, anything. I do a lot of cycling. There was someone that was, I'll interview that said they were a Cat 2 licensed cyclist. I looked at that. We talked about cycling. Here's someone that's persistent, works hard, focused. Anything that can set yourself apart. Clubs, finance, marketing, econ. Check that box. Athletics. You want to be able to tell a story. You're a well-rounded person. You're smart. You're hardworking. You're focused, and demonstrate that not only in the resume, which will hopefully get you in the door, and then after that, how you can talk about and relate your experiences to the resume and then to the job.
Yeah, excellent. Thanks for that set of responses. I actually want to drill down here just a bit, and we don't have to go person by person if you have an opinion on this. So say you hire somebody, right? What specific skill do you want them to have or develop in the first, 2 to 3 weeks? And in particular, is there any quantitative skills that the student should be aware of and should be focusing on, whether that's Excel skills or computer programming skills or financial analysis? What specific skills do you think would really help make for success in this job, aside from hard work, right? Interpersonal skills. Any thoughts from the panel? Go ahead, Mark.
Sure. Yeah. This might. It's not necessarily maybe a technical skill, but I think social skills would be like one of the best things, because as you're new, there's a lot of things that you don't know, and I think if you can develop good relationships with the team and the group that you're working with, those people will know it, and if you can become friends with them and learn to trust them and them to trust you, I think you'll be able to learn pretty quickly, rather than the inverse, being in a bubble and thinking, well, I don't know this, I don't know who I can ask or what I can, who's going to help me. I think that's pretty important, and it really shows that you are a team player and you're trying to move the needle for the whole team rather than just for yourself.
Yeah, for me, I would say just being able to hear something once, and whether you're taking good notes mentally or down, but retaining it. You'd be shocked when you come, and last thing you want to do is come into a job and have to ask something 2 or 3 times. I'm not saying that's bad here or there, but if you're doing it on every single thing, I would say most of the people up here are extremely busy, and if you're going through a training program and you're not 100% invested, there's a big problem for the beginning. And I would say, and this is something that TJ and I talked about before, you want, for lack of a better term, like management like on your side, because you want someone to take you under your wing like early. And we can talk about that later, TJ. But if you don't, you're not all in the training program and standing out, like they're not going to take 5 people under their wing. They're going to take 1. And I can say that from personal experience, and you want to be that guy or gal. So that would be my response to that question.
Yeah. Anything else?
Yeah, I'll just, the one comment I'll make, and it kind of goes along with this, when new analysts or wealth management professionals start on my team, I'll flat out tell them, listen, I'm assuming you're here because you're smart and you're hardworking, right? You need to do that. But having said that, you're coming right out of college or your background, I'm going to assume, and this is no offense to whatever college you went to, I'm going to assume you know nothing about what we do, and that's okay. So I'll say, be a sponge. It's similar to what you're saying. You need to learn this. You can make mistakes because your first number of months, you're going to be closely monitored as it's a training process. Don't be afraid to ask questions. I'll have the first number of weeks or months, I'll have new people on my team. They'll shadow me. They'll listen in on mute on conference calls. Sometimes I'll bring them to a meeting because they did all the prep work for it. And I'll ask them after the meeting, any questions, because the client asked this one or beat me up over this or that. And sometimes literally I'll be on a 2-hour meeting. We'll walk out, any questions, anything I can help you understand, and some of it will get pretty technical. And I've literally had some times where someone's been on the job a month. They'll say, no questions, I'm good. And I'll look at them and I'll think, really? Not anything? And they'll, no. And what I say, it's okay. Especially, you almost have a free pass your first number of months on the job. Because this is new to you, and that's okay. But if you start asking questions 6 months, 9 months, 12 months, there's something that you should have known, day 1 or day 2, that's where we start to have a little bit of a problem. So I would take that free pass, take advantage of it, ask questions, learn everything that you can early on, because that's where it's all going to come together. Because you don't want to, 12 months down the road say, I'm not really sure how that works over there, because that's where you're going to stand out.
Yeah, thanks for that. I actually want to follow up on that again, just to something that both Lucas and Brian were alluding to. And I apologize, guys. We're way off this list of questions I sent you guys. But did you have a mentor in your career, right? And can you tell us about that? And did it make a difference to where you are today and to your success in the industry? And that's an open question for the panel.
And I work for one thing that I would encourage all of you to think about, because it is a competitive job market, 4% unemployment. You have a lot of selection. The demographics are on your side. A lot of people are leaving the workforce, and a lot of employers are looking to hire new people. And and when I graduated, that wasn't the case. But I did try and find an employer that I wouldn't be ashamed to express that, I work for this firm. So I went to a commercial bank, into a commercial loan training program that was very prominent, and from there went to the Federal Reserve. So I was very pleased that I was with a reputable organization. Then within that organization, there were top experts sitting just across the hall. And if you had the nerve and you thought about what you wanted to know more about, approach them at a lunch counter or when they have a few minutes, they like to have that relationship with you. They like that curiosity. Don't pass it up. There are too many good folks in the industry that want to pass that along, and so mentorships aren't difficult to develop.
I would say I've got a interesting story regarding mentorship. When I started at SoFi, I basically showed up and said, I'm sure my resume looks like everybody else, good GPA, etc. And I just looked her in the eye and said, if you hire me, I'm not going to let you down. But let's just say a little bit more firm. And I got a call 3 hours later and said, you're hired. And then when I got there, I can't say that I had a very good social life. I worked, and I supported 3 directors around the U.S., and one of them was the top producer in the company. And I made a internal decision that I wanted to become very close to him, and we became very close, and we were crushing it. And I, said, I don't want to do this forever. And he said, get to know Tannenbaum. So Tannenbaum was our VP of Finance at the time. Not a easy guy to talk to initially. And so I saw him in the gym one time. He was on the bike. He's a Goldman guy, and he had a tablet, and he was barely biking. And so I gave him a really hard time about, I'm like, why, just go back up to the office. Why are you here? And he was just who's this kid that just came and started making fun of me? And that was, I guess, my way of getting to know him.
They could have gone either way.
That's a high risk.
I guess that's kind of my style. So he kind of smiled, and then he walked past me, and he made a comment, and then we started talking, and from there, we worked in the San Francisco office and became close, and we got to know each other because I was there late, and he would go, I'd come from the gym, he'd go work again, and so would he. And so we had that commonality. About 3 months later, he got tapped to be our VP of mortgage, and 30 days in, he said, I'm coming back to San Francisco, I want to meet, and he said, come join me in mortgage. I'm like, what am I going to do? And he said, we'll figure it out later. And I said, okay, let me think about it. And I'm like, what am I going to do? And he's like, well, join the sales team and do more, just I need you, come join my team. And I'm like, I've never heard of this position. Whoever thought of going into mortgage? Anyways, thought about it, took the plunge, and it was one of the best decisions I've ever made. I went to work for him, right? And I went to go build something. And funny enough, we ended up, when I moved, I lived in San Francisco, and the office was an hour and a half north, and I told him, I'm not moving up there. It's a long commute. What are we going to do? And he's like, well, SoFi will pay for an apartment, and we'll have a place up there. Anyways, our CEO at the time, Mike Cagney, came back and said, why don't you just stay in my guest house? So we ended up living in our CEO's guest house in these rolling vineyards for a year. So a very atypical story, but without Michael's mentorship, I would not be where I am today. I've had 4 positions in 2.5 years, and now I manage a sales team. I think having a mentor allows you to be bolder. Personally, I think I'm a pretty bold person by going up and telling him giving that was just my way. But when you're in a company and you have someone that has your back, you can't be reckless by any means, but you're going to, I think bold's the right word. And if I wasn't bold, I wouldn't have gotten to where I am today. And I know that Michael shares the same thing where our CFO was his mentor, and he wouldn't be. So I think it just, if you find a mentor early and you really cultivate that relationship, I think it will pay off. Michael now is joined or co-founded a payments startup in Silicon Valley, and your mentors end up becoming one of those people where it's you could walk in the door and you've got a job, right? Or they're going to set you up with somebody, so job-wise. So I would really encourage you to find someone early and often and set aside time to cultivate that relationship, because the dividends it will pay are enormous.
For me, I interviewed on 9/11, and I was driving down from Utah State down to Utah County to interview, and this was for an underwriting position. This was a position that I just wanted to get my foot in the door with in banking, and so I interviewed for it, got the job, started working in that position, and was there for 4 months, and they had fired a loan officer. And they said, hey, we need somebody to go help out and just manage his portfolio while we find someone else. Will you do that? Sure. And while I was there, I developed a really good relationship with the branch manager. And I wasn't really even thinking that I was really seasoned enough or had the experience enough to be in that relationship manager position. But he said, hey, you've been here for 2 months. You've done a phenomenal job. Why don't you apply for it? And I'll support you in it. And I think I lacked the confidence to think, well, am I really ready for this? Could I do this? But he had confidence in me because I think he saw my ability to learn and to work, and my ability to communicate with the customers that were in that portfolio, and he wanted to support me. And I worked with him for 7 years, and he was always helping me try to be successful, introducing me to people that he knew, different leads that would be helpful to me. And so he was just kind of there, as you were saying, had your back. He was just kind of looking out for me, trying to help me be successful. And I don't think he did that. I think he did that because he could see that I wanted to be successful also.
I'll just make two comments. One, as far as mentors, you can learn good and bad from people, which can be very helpful. My first job was a 2-year analyst where I was assigned 4 advisors. It was 2 different teams of 4 advisors. Successful, but one, for example, she was unbelievably good with clients and just an intense focus, but she worked hard and not smart. So I learned from her, okay, the client part I get, but I'm not going to do that part of it. This other advisor, I don't know what he did well that much, except for a trading strategy that he used, and it's a very big part of my business today. Another one was unbelievably focused on just investments, which, I kind of learned that from him. So again, there were many things that I learned working with people. I said, that's a great quality. I'm going to try to do that. That's a quality doesn't make as much sense. Try to avoid that. But I think you can learn from a lot of people. And then the last thing I'll say is, once you get in the business, there are going to be individuals that stand out that are very successful. Find out what they're doing. Ask them to lunch. Ask them to, why can this person, given the same set of circumstances, rise to the top as where others can't? What is he or she doing different than others are? And try to learn from them.
So I've got just a couple more questions for the panel, and then we're going to open it up to the audience. And we really want to hear from you. So if you have a question, make sure to jot it down. Don't forget it. We want to leave time for that at the end. So let me ask a question, and I guess I'll go back to you, Joe. Kind of big picture, right? And when you think back about your time working in the banking industry, what are some of the most rewarding experiences you've had? Like, what are the things you look back and you think, yeah, I'm really glad I chose this career path?
Yeah, that's a great question. Shortly after I started working, literally a few weeks after I graduated and started my first job, had a super smart kid, a Harvard grad, come up to me and he said he was quitting, and he said, today's my last day. I said, are you kidding me? And he said, yeah, dude, banking is so passé. I'm going to Silicon Valley. I was like, wow, I thought I just got to the top of the world. This kid wants to leave. And sometimes it's easy in the financial services industry, especially banking, to kind of view it as the old guard, and it's, I don't know, banks are evil, right? And there are a lot of really rewarding things you can get in banking, primarily because it touches every industry. Banks make the world go round. So an easy answer, what's most rewarding to me about banking is the fact that you get to learn about all these different industries, because banks finance literally every developed countries, people and businesses. And so one day you could be learning about tech companies you could be lending to, or you could be learning about industrial companies. So overall, I would just say the breadth of experience that banking gives you across all different industries, whatever those could be. I mean, there are major cycles in the economy and different trends that come up in tech, and banking is a part of that. So there's no shortage of interesting experiences that will help you touch all different markets within banking.
Rick.
I think for me it was situations where you had the opportunity, whether it was in banking as a lending credit officer, or in my case at the Federal Reserve, banks and corporations get in a little bit of trouble, and sometimes you're in a position where only you are going to make the decision. Everybody's giving you data, everybody's giving you feedback about what can go wrong, what won't go wrong, things like that. But ultimately, somebody has to say, are we going to keep this bank open and operating, or are we going to shut it down and sell it over the weekend? Or are we going to try and work out a program in which they can, maybe with special access to the discount window, some liquidity, as was mentioned earlier, will it reform itself? So one of the rewarding things was, whether it was in commercial banking or as a regulator, was taking a firm and seeing it get into a little bit of trouble and making the effort and living with the consequences if you were wrong to turn that firm around. And so those are the high points in terms of in my career, and the teams that I could trust that worked with me on those decisions. If you can partner with people that you can trust, you're in good shape.
So when my children get asked what I do for a job, they tell people that I'm a loner. So that's pretty rewarding to be called a loner. And you know, my brother was skiing in British Columbia, and there's a double black diamond hill there called Kill the Banker. You know, and so that's some of the sentiment. And you know, one thing that I do pretty regularly is go into the schools, elementary schools, and teach kids how to save money. And one thing that I'll ask them is, you know, how many people in here want to be a banker? And guess how many hands go up? You know, and it's interesting, and because, you know, I don't think it's something that people would really aspire to, especially in the elementary school age, but really banking is very, and I would say fulfilling rather than rewarding. The part of my job that I love the most and that keeps me going every day and excited about my job is meeting business owners in our community. These are some of the people in our community that just make things happen. They're taking calculated risks. They're hardworking. They're very creative and innovative. And I get an opportunity to know them, to work with them. And it's fun to see them in the community and to be part of their success. You know, as they contribute back to the community with the things that they're doing, I'm a part of that as I'm helping them finance their company and help them grow. I really enjoy it. I think that's probably the thing that is most fulfilling for me. Lifestyle is a really important part for me. My family comes first. That's where my focus is. And this job allows me, you know, the banker's hours aren't necessarily 9 to 5 anymore. You do have to put in the time, but you put in the time and you do your job, and that's really, you know, what you do. You know, you're not working, you know, 80 hours a week. You know, you do your job, you put your time in, and you can be successful at what you're doing, you know, in my role.
Lucas, yeah.
I guess I could sit up here and say that, this thing's on, that, you know, providing loans and helping people get their first home is exciting, and it is, but the question was, like, what's the most rewarding? For me personally, that was rising to a spot within the company where I could say I could pitch an idea and create a new position, which is what I did. So I was a loan officer, and I decided I didn't want to do this anymore. And so I said, hey, I want to move out to Salt Lake. I want to go we were opening a big ops center, and I said, I know we have 70 seats out there. Let me move out there. Let me go build a training program, recruit. And by the way, everyone I want to hire, I want to have no experience. And I want to build them from the ground up, because our first ops center, everyone had a decade of experience. And I would say SoFi is very different than most lenders in that we don't have the opportunity, unfortunately, to know our clients personally, because we don't work in, you know, the community that our office is in. So it's a very, you know, fast-paced environment. And I basically said, like, look, I had no experience. I was able to do it. You know, I think I'm intelligent, but I'm not the smartest guy out there. You know, why can't I'm not the Harvard guy going to Silicon Valley. But why can't we do it on a grander scale? And it's actually better for the company. So that's what I did, and I think that's the most rewarding. Actually, 6 out of the 12 are Aggies, so that's a huge number. which I will say none of them would have been here without Holly, so thank you. But I guess one other thing I would say is like don't discount I firmly believe that things happen for a reason. I forgot which class it was, but I spoke in a corporate finance class. Holly and I walked there. It was actually the wrong class, and the professor was like, "Oh, I'll let you speak." And I spoke, and two of the guys that I hired were in that class, and they're actually two of my top producers. So we laugh about that all the time. They sit right behind me, and we kind of joke like, what would happen if you didn't talk in the class? So that's my story.
What I would say the most rewarding, it's hard coming out of college without working at a job exactly what you're going to want to do. And so the first couple of years, I was at Goldman. It was a 2-year position. I had an opportunity. You look at a lot of different areas. Is it trading? Is it do you like numbers? Do you like the credit markets? Do you like investment banking? Research sales, and so it gave me ability. I think I could say that for most students. Your first job probably isn't going to be what you stick with. It might be, but you'll have a chance to learn and really, couple hopefully what your passions are, what really you like versus what you can end up doing. So the most rewarding, what I like, 2 things on mine. One, it combines the financial markets and investing, which I like. And there's a lot of jobs you can do with that, but it also has the client contact where I'm working directly with the clients. And so I got a major in finance and marketing, so it almost brings those two together, and it's worked well. And then the other thing is, I'm like, living in New York, I'm not from there, I don't speak the same language, I have a hard time fitting in at times. So I really liked in this specific area where whether my boss loves me or hates me, it has zero to do with how well I do. It's meaning, you kind of create your own business. And that was really important to me because I just didn't want to try to remember my boss's wife's name and their pet's name and, all that. I'm just not good at it. And so this is like, I found a job where you had the ability where it's basically rewarded on your own merits.
Yeah, excellent. Thanks for that. So last question for the panel, and then I think we'll take some questions from the audience. What sort of changes should we be prepared for, right, in the banking sector? And they could come from a lot of areas, obviously. So the regulatory backdrop has changed and maybe is changing again. And then we have financial technology, right, and new innovations in finance, which could completely change the landscape in the investment and the banking universes. So maybe just give us your thoughts on where the industry is headed and what sorts of surprises we might expect, and I'll leave that open for whoever's brave enough to jump in first.
When you proposed that question, I thought I'd change my answer to your last question, which is what's most rewarding. In some ways, to me, what's most rewarding is actually trying to change with the times. I mean, think of fintech. Think of all the different waves of disruption that are coming towards the financial services industry. When you talk to a wealth advisor and ask them what robo-advisors are doing to the industry, or talk to a normal commercial bank and ask them what SoFi and other companies, whether they're kind of the marketplace lenders, the peer-to-peer lenders, or other types, what they're doing to the industry. What's PayPal and Venmo doing to the industry? The banks have responded with Zelle. There's so many changes going on right now. In some ways, to me, that's one of the most rewarding aspects of working in this industry because there's a lot of change afoot. I guess things to look out for. Other panelists can definitely touch on those, but for young people who get technology, I mean, there are enough talking heads on CNBC to give you their opinion of Bitcoin or cryptocurrencies or blockchain. But it's just one example of a technology that's really going to come and disintermediate a lot of industries, or at least a lot of the processes that industries have foundationally run on. And so I think, without going into much more depth, that is super exciting, and you can always try to be ahead of the curve and change how finance happens.
I'd echo those remarks, especially from a regulatory perspective. That technology is a really good labor technology swap. So the ability to deliver, whether it's consumer credit, payment systems, to even wholesale credit is going to be much more efficient. It's going to be much more competitive. It's going to be faster. The risks are not going to change. The fundamental risks aren't going to change that much, but how do we measure those risks quickly and understand what positions banks are in? Joe mentioned disruption. There's a bank, and it's public information, and they would tell you the same story here in Salt Lake City. Medallion Bank. Their name comes from the taxi medallion business. And so they would finance a New York taxi cab's medallion that might be $2 million. Lyft and other ride-sharing firms show up. Suddenly those medallions aren't worth as much as they were. That bank had, their whole loan portfolio was based on taxi cab medallions. They're doing fine. Their capital is going to survive, but that disruption is healthy for our economy. But if you're a bank with a strategy or a financial services firm with a strategy, how do you transition into that new world? And the people that figure that out first will be the most successful.
So we, here locally, we just did some remodeling on one of the branches that was on, it's on First North, just there by the Tabernacle on Main Street. And as they were doing that remodeling, they pulled out an old newspaper clipping, and it showed a picture of the teller line, and you had 6 or 7 tellers, and each one of those tellers had a line of about 15 people deep. I mean, it was, there was a lot of people there to be helped within, the retail branch there. Well, that's not the picture today. The counts of people coming into the branch to do their banking and their business is way down because people can do it online or on their phones. And so that part of it is changing and will continually change quite rapidly. As I said before, there's people really aren't coming into the bank, to get loans. You have to go find them, and you have to go convince them that you're the right bank to lend them the money. And it's somewhat of a commodity, but what does set us apart, is the services, the ancillary services that we can provide with treasury management as far as how they collect cash and move cash and disperse cash. Those things, if it's convenient and cheap, then those things can set us apart in a competitive situation. And there's a lot of opportunity, I think, in that realm in banking because it's going to be, it's the cutting edge of what we're doing and what our customers want to help them be successful.
So when SoFi was founded, we were the first ones to refinance student loans, and so there wasn't any competition. And then, say 6 months later, there was. And then there was a huge shakeout in 2016 where I would say the credit markets tightened and nobody could sell their loans. We had recently raised $1 billion, and I had asked our CFO at the time, hey, we just raised $1 billion, what are we going to do with it? And his, words, 3 words, defend and protect. So we were really lucky to have the money, and so we just continued funding loans and scaling while everyone else laid people off and reduced the amount of loans that they were able to offer. And so that, I think we went from say a 50% market share to 75 or high 70s in say a 6-month span. That definitely wouldn't happen if we hadn't raised the money. Since then, now there is a lot of competition in every market that we work in or every product line. Marcus, for example, we see bigger banks coming in with lower cost capital. We've never been the lowest rate. We sell on brand and service, and we can fund a loan in 2 or 3 days. So it's getting tougher and tougher, and we expect 2018 to get even tougher. What that means for startups or moderate-sized companies like SoFi is you have to continue to innovate. We just launched a new student loan refi product for med students that are in their residency that no one else has, and I think that's when you can do really well. And we've got a couple other things coming out that we're excited about. But one thing I will say, and it's not in my realm, I see a ton of money going into insurance technology, and I have a bunch of buddies that work in that space. And so I'm really curious to see where that field goes, because there are a ton of companies. I'm from Silicon Valley, so that's just what I know, that are working anywhere from homeowners insurance to microcredit, or microinsurance, sorry. But I'm really interested to see where that goes, and then as well as credit cards. I think that Visa, MasterCard, Amex, there are some competitors that are touching some niche spaces, and I'm also excited to see where those go. So.
I'll just briefly add, you mentioned the two areas, Goldman, that have grown the fastest over the last 10 years. One of them really good, one of them, in my opinion, not so good. They're not so good, and actually it is the fastest growing area over the last decade at Goldman would be regulatory, compliance, and legal. I'm going to be biased when I say this, but you could argue before the financial crisis, if it's a pendulum, I'll be the first to admit, maybe things were a little loose, but I think it swung way, way too far over here where you just have regulators roaming the halls of Goldman and other banks, where it's really made it hard for us to do business in a lot of areas. It's absolutely slowed us down and other banks down. Now, with Trump, you can love him, you can hate him. Usually it's one or the other. There's usually not a middle of the road with him. But you'll talk to most people on Wall Street, and they'll say the one thing that they do like, even if they do not like Trump, is that this talk of deregulation can really help the financial industry. It doesn't need to swing way back over this direction, but maybe a little bit more in the center would be very helpful. Second fastest growing area is technology. You will hear our chairman and CEO call Goldman not a financial firm, but a technology firm. And it's really taken over the industry in the last decade. If you watch CNBC now, they'll go on the stock exchange floor. They struggle to find people, traders in the background. They have to literally walk around and put the cameras where they can find a trader in the background doing a trade, because technology has literally taken over the trading. They have empty, in the New York Stock Exchange, they have empty rooms now where they don't even go. So again, you see that changing the industry, not just with the trading, the lending, but everywhere, where technology is one of our largest areas of the firm right now.
Thank you. Fantastic. Let's take some questions from the audience if we can.
Ryan Goodmanson, MIS. We talk about innovations in technology for business processes, but a lot of the hiring process is still kind of stuck in the paper, flinging. So what innovations would you like to see in the next, say 10 years when we start hiring people that maybe are hampering finding good talent?
You've been drafted.
So I'm sorry, your question is, just so I understand it?
What innovations would you like to see with the hiring process from either a company perspective or what could we do as we're looking for jobs to make it easier on you rather than just throwing our resumes out and adding to the stack?
One, actually spoke about this with Paul earlier. Utah State, I'll speak for Goldman, for example, because of the SALT, the greatest thing coming out of the financial crisis for the state of Utah was the Goldman Sachs office. It just boomed. We went from, in 2007, went from about 200 employees to now about 2,000. And that was because of the financial crisis, where we found it much easier and cheaper, and because of technology, where we don't need to sit in downtown Manhattan where real estate's high, taxes are high, salaries are high. And so as everyone's looking to cut costs, it's just, it's unbelievable the amount of hiring that we've done in the Goldman office. So that's one, we have an imprint, and we were fortunate enough to get in there early enough. But as I was saying to Paul right before this started, I said, he was telling me about the great hires coming out of Utah State that are going to start in the next year. And if you can build a culture there where you can continue to help other USU students. When I went back and interviewed for the first time, I went in there and the people in the interview room, they knew the other students, they knew the schools, they knew this, which is such an advantage, as where I think if Goldman, or if Utah State can become really a cornerstone at Goldman, which I think they really have in the Salt Lake City office, where so you're not just blindly sending in resumes, but you actually leverage the talent that we have in the existing Goldman office. I think that's a huge part, to get mentors that are actually working there now to, students that really want to do it. They can be so helpful just versus just going on the website, which you need to do anyways. You need to do your hard work. But there's so much leverage inside Goldman now, especially that I don't know the final count. There might be a couple hundred people that work in the Salt Lake office, and really find a way to connect and leverage that.
And I'm not really supposed to say anything because I'm the moderator, but I came out of the financial industry about 2 years ago, and I entered about 15 years ago. And the hiring process, not so much at the beginning, but has dramatically changed. And I'll just say this, use social media to your advantage. Right? You hear a lot of stories of people for which their presence in social media has been a disadvantage. But you can really use it to your advantage. So for example, we were looking for somebody with an expertise in the Asian technology sector. And the best person out there wasn't at a Wall Street firm, it was a blogger, right? So, and everyone knew about him, right? In fact, you would read your Wall Street reports and you'd read this guy who was a blogger. And so we went out and said, do you want to come? And he said no, because he was making enough money from his blog and had enough freedom that he didn't want to join a large firm. But I think it's already changing dramatically, and if you as a student can figure out how to use your social media to your advantage, I mean, everyone here is on LinkedIn, and if you're not, get on LinkedIn, right? And the second thing you can do is publish something on LinkedIn that's thoughtful and intelligent, or let the LinkedIn universe know how you're succeeding as a student, right? We have a great set of students that just won the CFA competition here in Utah, right? And it's on LinkedIn, and it should be, right? So I think it's changing, and there is a way to get out of the resume game.
I have a quick comment on that. I actually have a good story. So coming out of college, I was interested in venture capital and going and working for a VC firm in Silicon Valley. And one of my dad does business with a company. It's benefits, and it's called Sequoia, which is associated with Sequoia Capital. It's one of the biggest funds out there. And I was like, Dad, can you introduce me to so and so? And he was like, okay. And this is someone he knows really well. Anyways, I was doing a bunch of research, reading about how tough it is. Ended up going a different route. And then one of my good friends from college, she was also living in San Francisco, and her 10-person startup went under. And so she's looking for a job, and she's like, dude, I really want to get into venture capital. I'm like, good luck, that's tough. And 2 weeks later, I'm like, hey, what are you doing today? And she's like, oh, I'm going to an interview at Andreessen Horowitz. I'm like, excuse me? Andreessen Horowitz is extremely hard to get into. And I'm like, how did you pull that off? And she's like, oh, I tweeted at so-and-so. She followed all of them, saw something, and made a connection, not just, hey, I want an interview. And so it was a thoughtful 140-character tweet, and got her in the door at Andreessen. She ended up, then they connected her to other firms. So, I mean, what you just mentioned is definitely, if you tweet at someone, don't expect it to work every time, but there are success stories. And she now works for a firm which is run by Max Levchkin, part of the PayPal mafia, and that VC introduced her, right? So they said, hey, I think you should go work for one of our portfolio companies. Went and looked at 5, and she, she didn't even submit a resume, right? She got an interview, so.
Thanks.
Sorry. So we actually have to get these guys up to a lunch with some of our finance and economics students, so we're going to have to rush them out. But if you could help me thanking them for all the insights they shared today.